Welcome back to the Milwaukee Market Update, where we break down what's actually happening in the Milwaukee real estate market. And today's big question: did Milwaukee keep up with all this new inventory that hit the market?
Yeah, Ty, we were seeing a huge increase in new inventory, and now we're starting to see how that's impacting homes going under contract. Today, we're breaking down the latest market stats for May and giving you a look at what it actually feels like to be a home buyer right now, directly from me.
Directly from Jake Barr, new homeowner, new house hacker. Can't wait to hear about it. Because let's be honest, there's a lot of noise out there every day. It's is the market crashing? Is now the worst time to buy? Is housing about to explode again? We're here to cut through the headlines and give you the real story about what's happening in Milwaukee.
Exactly. Whether you're thinking about buying, selling, investing, or just trying to understand what's going on with housing, we'll break it down in a way that actually makes sense. And if you're new to the show or you've been getting value from these episodes, take a second and hit subscribe. It helps us reach out to more people who want real, honest real estate info. You can also find us on Instagram at Horizon Homes MKE or at homewithhorizon.com.
All right, let's get into it. So how's everything going, Jake? Welcome back to the pod.
Doing good, doing good. No complaints over here.
Yeah, love to hear it. Obviously, we just came off the intro here. We're just crossing our fingers, just hoping that the audio is as good because we don't have our tech wizard Nick here to help us out. But happy to welcome you back and talk some numbers. My favorite thing. I know you enjoy talking some stats too.
Definitely. Yeah, the audio, it's going to be learned as we go today. Hopefully everything sounds okay, but yeah, we'll figure it out.
Yeah, we'll definitely figure it out. So we're back again with a market stats update. You know, it's June 17th today. We've got May data of kind of what's going on in the Milwaukee real estate market here for the three county area. We'll run through that, but I think before we even just dive in, Jake, I know you're having an awesome year in business this year. You're working your tail off. We're comparing our activity inside of our dashboards recently, and you're definitely doing the hustle. What's it looking like out there in the market? And feel free to kind of break it down based on the different price points and the different markets that you've been helping. Different type of home buyers, sellers, etc.
Definitely. Yeah, it's been what feels to be a lot of the same. Very competitive. We're seeing a lot of offers being written on those good properties in the good areas. Low days on market and just very tight inventory. Me with both my investor clients as well as my home buyer clients, it's really just been like keeping close eye on the market, finding the one that you like, and making a very intentional offer when you do see that one that comes around that you like. So speed kills right now. I've won winning offers where so far this year where we got in there day one, and then we got an accepted offer maybe later that day or early the next day, and the agent has responded and said, hey, we got other offers, would you beat them out? So a lot of the same, busy, fast, lots of offers, like the usual here.
Yeah, that's something we've touched on a lot this year, and that's been the last couple of years. Usually it's been kind of beginning first half of the year, move fast works, which is what you exactly described. Get into the house the very first day. You have to be obsessed about your search in order to do that as the client. And obviously we're there to get you in the door as fast as possible too. And then you have to have a high level of conviction to actually make that super competitive offer when you're the very first one submitting. So totally agree. That still wins. I know the other thing that you've been doing a lot of this year is you've certainly helped the condo market as well. You've had a few people moving in there, and that's something that I know Nick and I very briefly glaze over. But I know that you've done a lot of like searching both at like the typical condo price point, but also the luxury condo price point too. Just give me like your pulse check of what it's like every day, boots on the ground in the condo market.
Yeah, it's a different landscape. I mean, the condo market overall, I would say, is just generally a bit softer than the single family, market. I would say it's much more common to see 14 to 21 days there for something. It's much more common to, see there being a little bit more supply than the single family homes. However, the same narrative is true. The right properties in the right locations, they're still flying off the shelf. I mean, we were in competition for multiple offer competition for a condo earlier this year at 1.4. Like, that's the same narrative is true at every price point. However, I would say it's much more reasonable to see that you would see a condo sitting for that little bit longer days on market. And it's just a little bit softer right now. I've heard that from other people as well. It's a different landscape than the single family homes, but overall, I would say the narrative is true.
Yeah. So the gut reaction I have is you say softer, right? We talk about the single family housing market, the duplexes in the investment market too. And it's if it's, not gone in 3 to 4 days, then everyone's kind of just like rubbing their hands together saying, oh, great, let's they overpriced it. Let's try to go get ourselves like a really great deal on this property, maybe under asking, maybe not, because sometimes that offer, even a week later, will encourage somebody else that's lying in the waits to come in too. What's
Mhm.
an offer look like when you have a condo that's 14 to 21 days in the market? Is it like a bloodbath for sellers, or is it still like, no, we're getting it for the list price, maybe with a little bit of negotiation? Like, walk me through. Obviously, we know what a competitive offer looks like when you have those multiple offers in condo space, probably very similar to what we have in the single family space. What does a winning offer look like when you have uh, that 2 to 3 weeks on the market for a condo?
Yeah, I mean, it's interesting because it's not that bloodbath for the seller. It's not like you're coming in here 20K low and you can ask for anything and everything you want on an inspection or anything like that. I would say it's just a pretty like standard transaction feel, pretty balanced leverage. When you're in that 14, 21 days at the seller, you're still hanging in there. That's what to me feels like a seven or less for a single family home, 7 days on market or less. So I would say the offer looks to be, 5 to 10K below list price, probably landing closer to list. Maybe you're lucky and you can work a seller credit in or something like that for a first time home buyer. Just those little extra things. You can have a full inspection maybe versus having to put some inspection coverage on there, or in some cases you're waiving it. So, I would say it's a little bit more buyer friendly, but it's not like it's a bloodbath for the seller, like you're saying.
Okay. So would you say like you're going in, you're shooting your shot, and you're pretty much expecting to get a counter, and the sellers are wanting to get pretty close to what they're asking is. There's not like a huge urgency, like I have to dump this property. That's not the vibes of the condo market.
Yeah, I would say that's accurate. Yeah, it's like, hey, every condo offer you're writing with that longer days on market, it's let's start here and, we'll see what we can get type thing.
Yeah. Yeah, very interesting overall. And I just feel like as we move past like the how do you get your offer accepted and just like what's the negotiation landscape looking like today, mostly on the single family and the two family space, is a year or two ago, if you put a $10,000 inspection coverage on it, and then you actually found a bigger issue that exceeded that amount, sellers very much would just dig their heels in and say, no, I'll just go to offer 4, 5, 6, 7,
Yeah.
just
Yeah.
keep on going down the line. I feel like now there's actually been a little bit more playing ball in terms of negotiation between buyer and seller. Like, I don't think buyers I think are more aware of how aggressive people were back in 21, 2022, waived inspections. And like, if they have a home inspection, they're going to try to use their ability to negotiate further. And in the most case, I've seen a lot of sellers be like, oh, well, I'd rather not go back to market. Like, it's not as much of a guarantee that you're going to have this flurry of activity, even
Yeah.
if you go back on market and just go to the next person in line. So even though it's like, I would say the most competitive it's been to actually get an offer accepted as a buyer, once you actually get an offer accepted, it's been more balanced maybe than like the last 4 years from like a negotiation standpoint. Did you see kind of the similar thing?
I would totally agree. Yeah. I mean, 2 years ago, it was very much so like, hey, we'll go back to market, no problem. And now, I mean, anecdotally, with the deal I'm working on right now, just had a pretty successful inspection, even though we had some coverage on the offer. They got two other offers. They wanted to make it work with us. And I don't blame them. I feel like I would have wanted to do the same thing if I was in their shoes, just because you just don't know what can happen here. Let's say those other two parties that wrote offers are now not looking, or they found something else. Well, now you're back to market. You're looking at 21 plus days on market. When you go back, you have this inspection report on file, all these other things, and you just never know. Days on market stigma really catches up to you very quickly, and all of a sudden you're on that slippery slope where you're doing price cuts and you're getting way out of that range where you wanted to land.
Yeah, totally agree. Well, thanks for the quick pulse check, especially in the condo market. Obviously that's something I think that you've like really found a niche in. Outside of obviously you help a lot of different clients, but I know that's one thing that I was super excited to talk through with you. But next up, which I know everyone's just clamoring for and waiting for, is going to be the monthly metrics here for May 2026, which I'll pull up here on the screen. So just kind of running through the overview of what we've got again. I think mostly what we want to almost focus on at this point in time is going to be our year-to-date numbers as opposed to the, year over year just for the month of May, just to get a pulse check of like, what are those trends looking? Is there any major changes to the trend? And then we'll kind of go to the numbers specifically. But starting with new listings, I think one of the things we're most excited about right now is so far we've brought 7,600 new listings to the market, up 11%. That's been one of the most exciting trends that Nick and I have seen. Overall, as we've looked at each month, usually trailing by a month, we've seen that those have gone under contract and we're keeping up with as new inventory comes, it goes under contract. So far in the year, 5,100 homes have closed, which is up 5%. Obviously, we think that will continue to grow as that kind of lags the new listings. Our days on market year to date has been closer to about 30 days, which is up 10%. But this is going to be one spot where I'm actually going to go look at May because I think it does matter of what is our days on market for the year versus what are the days on market last month in a more competitive market. We're looking at about 20 days on market here in May 2026, which is moving actually faster than a year ago. This is the average. I do have the median pulled up as well, which we'll probably elaborate on in a second. But things are moving twice as fast, essentially, here in May as what they were in the early part of the year. In terms of year to date for price growth, median sales price is now at 357 for the year on average, up 4%. But we're kind of hitting that peak part of the year here in May at 375 is our current median sales price. And then percent of list price received, this is going to be for our May number. We're looking at 101.7. So 1.7% over asking on average. That's exactly the same as what it was a year ago. Inventory currently sits at 2,700 homes, up 10% year over year, which honestly, we'll talk about more, just like we have on previous episodes. We desperately need more inventory. And finally, months of supply, 1.9 months, still sitting below 2 months in total. Very clearly, still a seller's market in total as we look at across all of our 3-county area. And this is for single family and condo townhome market. But anything that jumps off the page at you, Jake, as we just go over the very quick overview?
I mean, not really. It's a lot of the same, honestly. I like to see that inventory is heading in the right direction, even ever so slightly, because we need it. I mean, the home buyer clients, the investor clients, it's hard giving people the conversation of, hey, this is normal to not see anything out there. And it's good to see things in the right direction. So yeah, there's not a lot to really dissect because it's a lot of the same of what we've seen over the past couple of years.
Which has been a note, we sound like a broken record. Like we actually like this predictability. Like there has not been any crazy changes in the trends overall, which we'll kind of get to as we go under the covers. Starting with new listings. I know we were kind of chatting before we even hopped on here, but this is new listings for May 2026. And the biggest thing that stood out to both of us as we looked at these numbers is May 2026, we're at 1,900 homes. We're now down just very slightly from a year ago, May. Had this really great momentum for all of the year. We had positive listing growth from January, February, March, April, and we're like up in the high teens, up 20% in new listings year over year in the month of March. That was like a really great momentum. And now essentially our 12-month average of new listing activity year over year is only up 5% if we just go back to the last 12 months. So it felt like we had this super great momentum in the first quarter of the year. And now that's something I'm kind of watching is like, hey, is it more of the same? Are we still going to be at a big inventory disadvantage going into 2027 as well? And we show this line chart all the time. We're sitting at about, again, that 1,900 listings. You go back to 2021 and before, and just like the typical new listing activity from 2015 all the way to 2020, we had almost the exact same new listing inventory line chart where we had these really great anywhere from 2,000 to 2,500 homes listed every single month on the month. And we're listing like 500 homes less than that every single month, which essentially puts us at a disadvantage when we look at inventory and what's available to clients. So that's what we're seeing on new listings. I think the one positive note I'll pull out is, our relationship we always talking about is new listings have been up double digits for the last 3 months up until May. We've been rapidly absorbing this. And I think this is where I look to you, Jake. It's like the second anything good comes onto the market as a new listing, it's getting absorbed. In May, we saw up 34% year over year of homes that went under contract, 560 homes. That's the second biggest month of going under contract activity that we've had since the pandemic. There was only one other month back in 2021 that exceeded that amount, which is actually crazy. And I feel like that's actually kind of what we feel. There's almost no inventory that's out there. And we had way higher inventory back in 2020, 2021. And we just had this massive lift in the number of homes going under contract. Anything that you've seen in terms of that as well, of just like, yeah, I've been busier than ever. Anything you can feel anecdotally from just what we see from this outlier under contract number?
Yeah. I mean, what I find most interesting about that is that we still have so much pent up demand, even despite how busy we all are and how many deals that, our team are doing every week, how many deals our team is doing every week and every month. We are still seeing that the second that we have those 2 consistent months of double digit inventory increases, that it's immediately absorbed. And like, that just goes to show like how much demand there is in our market. And there's just so many fatigued buyers who are like, yeah, it's just not the time for me. Like, I just don't want to compete, like interest rates, whatever it may be. The second we get a sliver bit more inventory, immediately it's absorbed because people do want houses here. And, there's just, there's just not enough.
Just not enough. And like very clearly, all that inventory comes, all that inventory is gone, 30 to 60 days later. That's exactly what this chart is showing. And then finally, closed sales, less exciting narrative. I mean, essentially what we're at here on the last 12 months is we're up 3% on closed transactions. I do actually think that slightly outpaces what the country is seeing from a closed sales. But certainly as you look at the line chart, we're definitely in a drought or a recession in terms of the number of transactions that actually are happening on a monthly basis, even here in the Milwaukee area. Moving on to days on market. So this is where we start getting into some of our competition metrics, if you will, is like that was kind of the inventory landscape minus like how it flows to the bottom line. We're sitting right now at 19 days on market, which, looking at the line chart is probably the easiest way to look at this. We still have the same average days on market that we had even at the peak of things moving pretty quickly in 2020 and 2021. Sure, slightly like by a couple days lower into the teens, but things still move fast. That's the way that they feel. I do also have pulled up, which I'll move to this tab instead. This is like the market summary, which I actually think is way better for actually demonstrating our days on market. This is the same data set. This is, except for it's single family only. So maybe a little bit more aggressive. Right now we're sitting at 4 days on market for the median versus what we saw in the other stat, which was, 19 days, or at least in this data poll, 23 days. Like things are moving 4 times faster than the average. You have everything that moves super, super quick in the very first weekend. Yet, right? Lists on a Friday, accepted offer by Monday. And then you have the average, which is just a bunch of other homes that then sit 2, 3, 4 weeks before they actually decide to take action. Let me guess, Jake, does your reality feel more like the median or more like the average out there in the field every day?
Yeah. I mean, The median is definitely going to be what I'm experiencing. That's what you got to prep your buyers for right now, and you prep your sellers for that too. But also, sometimes people have unrealistic expectations, or whatever it may be, and that's where you might fall into more of that average category. So, yeah, that's what you see out there right now.
And and I think this also helps demonstrate of like the year to date number for this, even the year to date median days on market is 7. And that's including January, February, traditionally slower moving months. Like it wasn't even moving that slow even in the cold months, but you can see that there's even a 10 to 15-day increase on the average. You just had a lot of inventory that probably was really stale and sat on the market there in the beginning part of the year. But the new, fresh inventory, which we're seeing in the pending sales, is moving super quickly.
Yeah.
Awesome. Now, what everybody really cares about, especially those that already own their home already, is median price growth. If for you that are following us here on the YouTube channel, again, this chart is just up and to the left. You see a little bit of seasonality where prices peak every single summer. Last month in May, we're looking at a median sales price of 375,000. That's up 4% versus a year ago, which honestly is a much healthier level of appreciation than maybe we've seen the last few years. The last 12 months, essentially median, what we've got is 365,000, up 6%, which 6% is essentially where Nick and I have been forecasting where our market's going to continue to appreciate. So maybe a slight slowdown to the trend, but we're literally about to hit June, July, August, which are always very high numbers in terms of our median sales price.
One item that I just like to, I think it's really interesting is just comparing this median sales price chart here to the other, the sold chart and the other ones, etc. You're looking at this one here, and obviously we're seeing really good growth. We're seeing really strong, consistent growth here. Nothing crazy, nothing, no 20% swings like we've seen in like we've seen in other markets. But it's just hilarious to me that our historical data for other, like the days on market, sold listings is just completely flat. I mean, like
Yeah.
our prices continue to outpace these other metrics, which just shows me how much strength we still have left in our market. Like even if we did increase our inventory, we have so far to go to even reach something more normal or balanced, which is, what we tell our clients all day, every day, whether investing or buying their home.
Exactly. And to like hit on that, now I've got pulled up the percent over list price received or the percent over asking. The way that Nick always likes to frame this is like who's driving price growth? Is it greedy sellers or is it ambitious buyers that just want a piece of the real estate game? And when on average you're going over asking at nearly 2% over asking, again, that's an average. Even taking some of these homes that do sit, they do exist and probably go well below asking because they're seen as damaged goods. Like we're seeing that pricing is being driven by buyers in a seller's market. Like they're having to compete. They're the ones driving up. Buyers want the homes more than in some case what the seller thought it was worth in the first place. So again, seeing about 2% over asking. We're about to hit essentially where the last 2 years have been in terms of the peak of where we see the percent of our asking go. We'll see if that actually gets up and above almost to the 103, 3% over asking, almost 4% over asking is what we had in 2021, 2022. We'll see if we land closer to the last 2 years trend for that peak season competition. And then, I almost wish that they put this, order inventory. I feel like should be right after close sales, so you can see how new listings that go under contract and then close actually impact the total inventory gain. But we don't get to make the decisions on how this is laid out. I think the positive thing I'm going to pull out from inventory is, we've got, just under 2,800 homes available for sale. That is up 10% versus a year ago, which is great. Make sure you don't read that as a scary headline of, oh my gosh, we've got all this new inventory. That's only like 250 more homes. And literally we had one of the biggest under contract months last month. The last 12 months, essentially, this has been very steady. Like we're getting about 9% more inventory year over year, which is good. because as we look at our line chart and what we hit on every single month is sitting at this 2,800 homes available for sale. Like we were well above 4,000 pre-pandemic, and that was also going to our next chart. If we look at pre-pandemic, that was also a mostly seller, borderline balanced real estate market as well. When we look at months of supply, we were still at like 2.3, 2.4 months of supply, even when we had essentially more than 1,000 listings more in the market, which probably also presented very good days on market, lower days on market at the most competitive parts of the year. Maybe a little bit more cyclical, seasonal at that point in time, but essentially looking at inventory, it's the same old, same old. We need more of it. And it's the same thing on the months of supply. We sometimes feel like this is under reflected because the second we have that big surge of new listings, which we had the last 3 months before May, and then May we had that big boom and under contract, it's going to stick around this 2 months of supply, even if we have this big boom of new inventory coming because the people want it. Anything else you got to add on months of supply and the inventory we're seeing, Jake?
Not really. No, I mean it's the same thing. It's the broken record. Yeah, it's
Yeah.
competitive.
Yeah, totally agree. So I guess where I'd probably like want to take this next, Jake, is where we're at on the calendar, right? It's June 17th. We're literally 2 weeks away from the middle point of the year. What would you say is like the number one thing you've seen the last few years where you've been helping clients? Like, what's the best piece of advice that you have specifically for home buyers or investors that are out there? Like, what do they need to be prepared for Q3 and Q4 this year in 2026?
Q3 and Q4 are really interesting because it's very different than the first half of the year. I feel like the first half of the year is just nonstop, go, 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 like really starting January 1st. I mean, that's when new listings are going to start to hit. And whether you're an investor or home buyer, probably more investor focused for Q1 because you have a lot of hungry investors who are looking to sell their properties in 1031. Also, you have a lot of investor buyers who are like, hey, this is my year. I'm going to buy an investment property. So though the Q1, Q2, very hot, very competitive. Q3, Q4, it's a different landscape. I mean, it's still really hot, really competitive. You have a lot of people trying to cram something in before the school year. And that's a big part of it. However, I would tell you there are these odd little gaps that you'll find in Q3, Q4, especially Q4, where you can get a decent deal. You can find something that for no reason might creep up to 7 days on market, and maybe you have a little bit of leverage to negotiate something. So it's really, really the what would you say the role of the buyer doesn't change whether it's Q1 or Q4. You need to be obsessed with your home search, and what I would tell you is that means different things in the first half or the second half of the year. First half, it's let's go in, let's write our best offer, let's do the usual. Q3, Q4, it could mean okay, let's keep really close eyes on the market because that could mean we pluck out a little bit better deal than we might have found otherwise.
Yeah, the being obsessed about your search. We always say we very rarely have somebody, if they want to buy a home and they're super committed to it, very rarely are they unsuccessful, even in like one calendar year, even though we hear stories all the time about people who have literally been shopping since 2020, 2021. This is the time of the year where you took the more, I call it the anecdotal, the emotional side of just like, hey, stick to it, get it done. The numbers are just in your favor in Q3, Q4. And most people know at the beginning of the year, like, I'm going to buy. I mean, obviously, it's like, Jake, we can talk about this in a second. You just bought your first home. You've known you wanted to buy a home this year, specifically, all the way dating to last year. Like, you knew it. You were a part of that duplex demand that we had, but you're off the table now. And like, that's me trying to take this numbers of like, there's a lot of other Jake bars that knew at the beginning of this year, January 2026, I'm going to buy a home or I'm going to buy a property. And more than half those people have been taken off the table from getting an accepted offer. And then a certain percentage of those people have just given up because they haven't been motivated or encouraged by their agent to just stick
Mhm.
to it. The worst thing you can do is learn all this market knowledge and be getting better at every single offer and then just give up right now. Probably my best tip for home buyers right now is Usually where we see a lot of that opportunity come is when the leasing time frame comes up and end of August, end of September, and now you're going to get re-locked into a lease. Start negotiating now with your landlord to like have a month to month, or hey, can I just like give you a 2 months head up instead of a 1 month heads up that like I've got a place that way I could help you find a tenant. Like be collaborative with your landlord, because otherwise you're going to have to commit to your lease 30 or 60 days before August or September, and you're locked up. Like you're not going to actually get the best shot at the best buying time of the year, where there's still good inventory, there's still good options and new listings, and it's not the dead of winter. You just have to open yourself up to flexibility.
Definitely. Yeah. I mean, I think you brought up a really good point, which is, I mean, no surprise how important the agent's role plays in your search, not only from the offer writing and the negotiation. Obviously, that's really, really important, if not the most important, in the advising side of things. But being your emotional support. I mean, I tell people all the time, hey, like, you know what, when you're missing out on that second, third offer, or, you know, just not finding what you're looking for, I say, hey, you're not alone. This is totally normal. You know, I have X amount of people who I'm working with right now who are in your exact shoes. People love to hear that. They love to know that what they're experiencing isn't different from the rest. And I just, you know, it's part of what buying a home or a property in Milwaukee looks like right now, is that fatigue of like, might take multiple offers, might take showings, you know, might not find exactly what you're looking for. And then you just have to be patient, and if you can, and just right there, be ready for that good one when it pops up.
Yeah, definitely. It's like our job's like the coach. It's like getting you rah rah. You know, it's like, hey, we're in the last stretch. It's okay. And like the reason it sometimes takes that 2 to 3 offers to get it done on average is because we're trying to do it the right way. Where it's like, I mean, we could get any offer accepted. Yeah, just go X% over, waive all your contingencies, and like, yeah, done deal. Like you're going to get the very first offer you write. But there's the difference between just getting it done and doing it the right way, which I think is our biggest focus. Is like, how can we like thread the needle to get you the most amount of protection in today's super competitive market?
Mhm.
And like sometimes that comes at the detriment of like a couple of disappointing you didn't win situations, but that's okay. There's always another home that's going to be just as good as a fit. Like sure, there's some that like maybe might be marginally better, but like there's a lot of homes out there that are going to fit your needs,
Yeah.
and try to do it the right way, give yourself those protections. But
Mhm.
Jake, tell us a little bit more. New house hacker here. Just tell me like what's going on. I see you're in your new digs already. Tell me a little bit more about your first purchase ever. First time home buyer, first time house hacker.
Yeah. It's been awesome. Really, really excited about it. We have been in here for about, I don't know, maybe 3 weeks now. So well, we're doing great. Still got a couple little things we're working on here and there. But yeah, picked it up. I think I closed on it it back in what, May 7th, I think, was my actual closing date. I had to wait for the lower tenant to move out, finish up her lease. The upper tenant has just re-signed while I was under contract. So that's great. They've been super great, and you know, super excited to have them here for another year. Makes my life as a first time home buyer and house hacker a lot easier. Not having to worry about something like that. So yeah, it's been awesome learning what being a property owner is like every day more and more. Got a laundry list of stuff that I'm looking to do and clean up and fix and whatever. So, but I was fortunate that pretty much everything was ready to go here when we moved in. So it's been great.
Yeah. So I've got to know, Jake, because it's always interesting when real estate agent becomes home buyer. What surprised you most about actually being a buyer yourself throughout the process? Where you're like, dude, I thought it was going to be easy, but then this kind of caught me off guard. Talk me through your experience a little bit, maybe psychologically, or what surprised you, even though you do this every single day as your career.
Definitely. I mean, for me, the hardest part was, you know, first of all, I am a horrible decision maker in general. I hate making decisions. Now, I don't think that I'm unusual. I think a lot of people fall in that boat. So, for me, it was the hardest part, and the thing that gave me the most stress and anxiety was deciding which property I wanted.
Actually committing.
And committing, yes. And, what I found, I was really obsessed with the numbers forever. I was like, man, I just got to get the best deal possible. Like, that's really what I need. And eventually, I think, probably by the guidance of you, Ty, and also Nick, I found like, hey, like this is a place where I'm going to live. Like, this is a place that, me and my girlfriend are going to live at for 1 to who knows how many years. And there was a huge aspect of that I really like kind of woke me up and was like, all right, no, this is something that I need to way more than I thought I might need to. So I don't know. The piece that gave me the most anxiety though was just deciding between these couple properties and that I had, the opportunity to have access to off market. And yeah, that was tough. And I did learn so much about the emotional roller coaster because obviously we do this all day, every day. We're helping our clients and we're always going to be serving them to the best of our abilities. But this is our job. We are, of course, going to be a little bit more desensitized to the emotions than our first time home buyer clients and, et cetera, it might be. So it was really good to add these emotions to my arsenal so I can say, hey, I've been there.
Yeah, definitely. Yeah, the psychological journey you go through. Am I making the right decision? Like we talk about the emotional roller coaster you go through. You kind of go through that, but you still have to have somebody to lean on, which in this case was, Nick and I, though we weren't your real estate agent for it. We do this every day too. And that's a big part of what we do as, real estate agents is we get to not be as close to the subject, not as close to the property and what's going on. And we can zoom up and be like, hey, like we talked in a non-stressful situation in your home buying kickoff and strategy session of like, what do you want? Does this check off needs, wants, deal breakers? And like, you probably went through that exercise without actually defining it in the moment is like, is this crossing off all my needs? Yes. Does it have most of what I want? Yes. Are there any deal breakers here? No. Okay, great. This is going to be something that works really well for us. And you have the added advantage of you want to be comfortable while you live there now in your first year or two as a house hacker, but it also is a financial instrument in the long term. So you want to make an emotional decision for now, but also a good financial decision for the future. And I think you did a great job navigating through it.
Yeah, I'd like to say so. I did the best I could. Yeah, everything's been great. So zero complaints. Just very excited.
Yeah, and I think the last thing that I know we talked about a little bit is you crunch your numbers and you've got these perfect spreadsheets and you're like, it's down to the dollar and you're like, is this good or is it not good? And I know at the very end, you got a little bit surprised too, right, on the upside of
Definitely.
when you plan things conservatively. Tell me a little bit more on that. Like you just actually like you ran all these numbers, you're a conservative guy. How did everything actually play out? Just give me a very quick example of what did you expect this house hack to look like and what is it actually turning out to be?
Yeah. So yeah, running the numbers like very conservative, of course, accounting for capex, maintenance, vacancy, etc. And basically all said and done, when I got my actual payment and realized what my upper tenant was paying me, I'm like, oh, okay, cool. Like this is less than I was thinking. Like this is, great. Okay. Like we can work with this. So, of course,
Yeah, give me your what was your expected house hacker out of pocket, which is our term that we use for this, versus what actually reality is turning into.
sure. Yeah. I don't know if you want me to spit out real numbers or not,
Yeah, I
but
love real numbers. Come on.
yeah, cool. Great. Well, I did too. So, yeah, I was expecting my all-in payments like $3,200 a month. My upper is paying $1,800 a month. So I was expecting my monthly to be somewhere in the range of like $1,400 to $1,600 a month. Which was totally fine. Like, that's perfectly fits fine with my lifestyle, etc. And then all said and done, my payment, I believe, is like 1,300 or something, like $1,311, I think is what my payment is. So
Is what your house at like your actual amount that you're paying each month
correct.
just
Yeah.
to live there. Great.
Yeah.
And
Sorry. That's my house out of pocket is
yeah,
$1,311. Yeah. Which,
yeah, and you thought it was going to be 1,600. And again, this is why we love the house hack. And this is the buy it now, refinance later. Like the actual more opportunity here is there is a good chance. I mean, you bought it probably pretty close to like a 6.5% rate, give or take, one way or another. You probably have opportunities now to refinance in the future. It's not going to maybe be right now. Maybe it's in the future. your tenant upstairs, usually rents go up over time. So like if you stay there for multiple years, you're probably going to actually see your cost of living go down
Yeah.
when that's like the exact opposite experience of what a lot of other people experience with taxes going up, insurance going up, maintain their home. It's actually you're hedging against that with having the renter there in place that actually is used to having those 3 to 5% rent increases every year because of the cost of doing business. So super excited for you, man. You're part of the game now. First time
Yeah.
home buyer, first time house hacker, and it's always great earning that empathy for your clients, just like me being a new dad, newfound empathy for the parents you see out there at the park or at the restaurant. You're like, oh man, I totally get it. And now you've got that exact same thing for your home buyers and
Definitely.
investors too. So all right, man. Well, with that, really fun walking through the numbers, but also through what's it actually look like when a real estate agent, essentially real time, is actually buying their own home. Uh,
Yep.
Happy to go through that with you. Hopefully, you guys found value. Please share this with somebody that you think might get some value out of both the numbers, if they're actively searching or if they're a little bit curious about the house hack. Reach out anytime. Other than that, we'll catch you guys again soon here on the Milwaukee Real Estate Market Update. Thanks.
Thanks, guys.